The financial world wants you to believe that building wealth requires endless hours of staring at complex charts and tracking every market fluctuation. They sell you the lie that you need to be a hyperactive genius to succeed in this game. But what if the secret to outperforming the experts is actually doing almost nothing at all? Today, I'm going to show you how to exploit a massive loophole in the financial system that rewards the lazy over the obsessed. In just 15 minutes, we're going to set up a portfolio that historically crushes active fund managers while you sleep. It's time to stop working for your money and start letting the math of the lazy genius do the heavy lifting for you. This heavy lifting usually starts with a trip to a mahogany-filled office where a guy in an expensive suit promises to beat the market. For decades, the industry has built a wall of jargon and complexity designed to keep you feeling small and dependent. They want you to think that without their secret sauce, your savings are destined to wither away. The reality is that these high-priced experts are often just guessing while charging you a premium for the privilege. Statistics show that the vast majority of active fund managers fail to outperform a simple market average over the long term. You are essentially paying someone to lose your money slower than the person next to them. This traditional model relies on the hustle culture of finance, where constant trading is mistaken for actual progress. It creates a smokescreen of activity that generates commissions for the brokers but leaves the investor with crumbs. The system is rigged to reward movement rather than actual results. Back in the mid-70s, a radical idea began to take shape that would eventually flip this entire power structure on its head. A few pioneers realized that instead of trying to find the needle in the haystack, you could simply buy the entire haystack. This was the birth of the index fund, the ultimate tool for the strategic minimalist. At first, the giants of Wall Street laughed at the idea of settling for average returns. They called it un-American and claimed that no serious investor would ever choose a passive approach. Yet, as the years rolled by, the data started telling a very different and embarrassing story for the pros. While the experts were busy panic selling during downturns and chasing the latest tech bubbles, the passive investors just sat still. They didn't check their accounts every hour or stress over quarterly earnings reports. By doing absolutely nothing, they began to accumulate wealth at a pace that left the geniuses in the dust. This shift proved that complexity is almost always a tax on your time and your returns. The financial industry thrives on making simple things look difficult so they can justify their existence. When you strip away the noise, you find that wealth isn't built through brilliance, but through consistent and boring discipline. Understanding this history is the first step toward reclaiming your financial freedom without the headache. We are going to use these same historical principles to build your own automated wealth machine today. It only takes a few minutes to set the foundation for a future where your money works harder than you ever will. This foundation was actually laid decades ago when the first index fund was mocked as a recipe for mediocrity. Wall Street elites laughed at the idea of merely matching the market instead of trying to beat it. They didn't realize that by cutting out the middlemen, the average person would finally gain the upper hand. Data eventually proved the skeptics wrong as the vast majority of professional stock pickers failed to keep up with the broader market. Over long periods, high management fees and emotional trading decisions act like a leak in a bucket. The math is cold and unforgiving, showing that the more you do, the less you often keep. As technology advanced, the barriers that once kept regular people out of these high-performing strategies began to crumble. What used to require a private banker and a massive net worth is now accessible through a simple smartphone app. This democratization of finance means the tools of the elite are now in your hands for almost no cost. Even with these tools, the biggest hurdle remains the psychological urge to constantly tinker with your investments. We are wired to believe that more effort equals more reward, but the stock market is one of the few places where that logic fails. Success here requires unlearning the habits that serve you in every other part of your life. Being a lazy genius means recognizing that your time is your most valuable asset and shouldn't be wasted on complex spreadsheets. You aren't avoiding work, you are choosing to work only on the specific things that actually move the needle. By automating the entire process, You remove the human error that destroys most traditional portfolios. Now that you understand why the old system is designed to fail you, it's time to look at the mechanics of the new one. We are going to strip away the jargon and focus on the core components of a truly bulletproof portfolio. Get ready to see exactly how these few minutes of setup will change your financial trajectory forever. But here is where everything changes for you today. Most people reach this point and get paralyzed by the sheer volume of choices available in the modern market. They have the tools, but they lack the filter to separate the signal from the deafening noise. You open an app and are immediately bombarded with thousands of stocks, trending cryptos, and complex ETFs. It feels like a digital casino designed to keep you clicking, trading, and worrying. This is the new trap, a high-tech version of the same old game meant to drain your focus. This constant stream of information creates a false sense of urgency that forces you into making emotional mistakes. You see a headline about a market crash and your first instinct is to protect what you have by selling. In that single moment of panic, you destroy years of potential growth and play right into the hands of the institutions. The breaking point comes when you realize that being informed is actually making you poorer. The more financial news you consume, the more likely you are to deviate from the path that actually leads to wealth. You are fighting against a system that is literally programmed to exploit your human psychology. To break free, you have to make an irreversible decision to stop playing their game entirely. You need to pivot from being a frantic participant to becoming a silent observer of the global economy. This is the lazy genius shift where you trade the illusion of control for the certainty of math. It feels counterintuitive to step back when the world is screaming at you to lean in and take action. Your brain is wired to believe that if you aren't sweating, you aren't winning. But the data proves that the most successful investors are often the ones who forgot their login passwords. We are about to strip away every single distraction and focus on the only 3 things that actually matter for your portfolio. We are moving past the theory and into the direct execution of a strategy that requires zero maintenance. This discovery is what separates the people who work for money from those whose money works for them. The stability of your old, stressful financial life is officially over as we enter the execution phase. You are no longer going to be a victim of market volatility or expert opinions. In the next few minutes, we are going to build a fortress that stands strong regardless of what the headlines say. This shift begins the moment you realize that the complexity you once feared is actually your biggest enemy. We are burning the old playbook and replacing it with a system so simple it feels like a legal cheat code. By narrowing your focus to just a handful of broad market assets, you effectively opt out of the financial rat race forever. The real conflict arises when the world screams at you to do more while the data proves you should do less. Every breaking news alert and every hot tip from a friend is a direct attack on your long-term wealth and peace of mind. You must decide right now to ignore the noise and trust the mathematical certainty of the lazy approach. Once you see how a single broad market fund can outperform a team of Ivy League analysts, there is no going back to the old way. You will begin to view every expensive financial product as an unnecessary weight dragging down your future. This realization is the point of no return where your relationship with money changes from a source of stress to a source of power. We are now crossing the threshold from theory into the actual mechanics of the lazy genius portfolio. The transition is fast and the impact is permanent, setting the stage for a lifetime of passive growth. Prepare yourself, because the next few steps will permanently delete the financial anxiety that has been holding you back. This deletion of anxiety starts with a simple login, but that's where most people hit their first invisible wall. You sit down with your laptop, ready to conquer the world, only to realize you don't even know which door to knock on first. The sheer number of brokerage platforms available today can turn a 15-minute task into a weekend-long research project. You might ask a friend for a recommendation, only to be met with a lecture on the latest niche trading app. They swear by some obscure platform because it has a sleek interface and offers free fractional shares of failing companies. Suddenly, your quest for simplicity is being hijacked by someone else's obsession with high-risk gimmicks. Once you finally pick a platform, you're greeted by a dashboard that looks like the cockpit of a fighter jet. Terms like expense ratios, bid-ask spreads, and tax loss harvesting start flying at you from every corner of the screen. It's a deliberate design choice intended to make you feel like you're in over your head before you've even deposited a dollar. Your initial instinct might be to hedge your bets by picking 10 different funds just to be safe. You assume that more variety equals more protection, but in reality, you're often just buying the same stocks under different names. This overlap creates a messy, redundant portfolio that is harder to track and more expensive to maintain. While digging through the fine print, you discover the silent killers known as hidden management fees. Even a tiny percentage point can eat away tens of thousands of dollars from your future nest egg over several decades. It's a shocking realization that the very tools meant to help you are often quietly siphoning off your potential wealth. Then comes the agonizing decision of choosing between two nearly identical index funds. You spend hours comparing historical charts and reading conflicting opinions on internet forums, hoping to find a secret edge. This analysis paralysis is the exact opposite of the lazy genius mindset, and it's where most aspiring investors eventually give up. Even when you find the right fund, a new fear creeps in. What if the market crashes tomorrow? You start checking the news for any sign of an economic downturn, convinced that your timing will be the one thing that ruins everything. This psychological barrier turns a mechanical process into a high-stakes emotional drama that keeps your money sitting idle in a savings account. These initial hurdles are designed to test your resolve and push you back into the arms of expensive advisors. You realize that the path to simplicity is paved with complex distractions meant to keep you from ever pulling the trigger. The problem isn't a lack of information, but the overwhelming presence of the wrong kind of information that leads to total stagnation. You might try to overcome this stagnation by waiting for the perfect dip, thinking you can outsmart the global economy with a well-timed entry. You spend hours staring at charts and reading conflicting opinions from self-proclaimed experts on social media. This search for the ideal moment usually ends in missing out on the biggest gains while your cash loses value to inflation. Then comes the temptation to over-diversify because you heard that owning 100 different things is safer than owning one. You start adding niche sector funds, gold, and the latest tech trends into a messy pile that you can't even track anymore. Instead of a streamlined machine, you've built a chaotic junk drawer of assets that requires constant monitoring and high fees. Even your well-meaning friends might chime in, sharing stories of a cousin who made a fortune on a single penny stock or a new crypto coin. These anecdotes create a sense of FOMO that makes your boring, effective strategy feel like a missed opportunity. You find yourself caught between the proven math of the long game and the seductive pull of a quick win that rarely actually happens. The real obstacle isn't the market itself, but the internal battle against your own desire to feel productive and clever. We are taught that hard work equals better results, so doing something simple feels like you're cheating or being lazy in a bad way. You eventually realize that every attempt to optimize through activity is actually just adding more friction to your path to wealth. This friction is exactly what the financial industry wants you to feel because they profit from your confusion. If you realized how little effort was actually required to build wealth, their entire business model would collapse. They need you to believe that investing is a high-stakes puzzle that only they can solve. Let's look at the cold, hard data that the big banks try to hide in their glossy brochures. Year after year, nearly 90% of professional fund managers fail to beat a simple index fund. These are people with Ivy League degrees and supercomputers who still can't outperform a static list of companies. You are essentially paying a premium for underperformance while these institutions gamble with your retirement. They charge you high management fees regardless of whether they actually grow your account or shrink it. It's a rigged game where the house always wins, and you're the one providing the capital. The hustle culture of finance tells you that you need to be constantly monitoring the pulse of the market to survive. They want you to believe that wealth is a result of high-octane trading and sleepless nights. In reality, the most aggressive traders often end up with the lowest returns after accounting for taxes and commissions. This is where the lazy genius arbitrage becomes your greatest weapon against a system designed to drain you. By choosing to do nothing, you are actually outperforming the experts who are constantly churning their portfolios. You are capturing the total growth of the global economy without the drag of human error. Think about the sheer arrogance required to believe anyone can consistently pick the next big winner before the rest of the world. Thousands of analysts are trying to do the same thing at the exact same millisecond. Instead of competing in that chaotic bloodbath, you can simply own the entire stadium where the game is played. The industry's biggest secret is that complexity is a marketing tool rather than a wealth-building strategy. They wrap basic concepts in layers of jargon to justify their existence and their exorbitant paychecks. Once you strip away the fancy terminology, you see that the most effective path is almost embarrassingly simple. We are now digging deeper into why this do-nothing approach feels so wrong yet works so perfectly. It's time to confront the psychological barriers that make you want to tinker with your own success. Understanding this mental trap is the final step before we actually build your automated wealth machine. This mental trap is fueled by the ego's deep-seated desire to be smarter than the average participant. You are conditioned to believe that more effort must equal more profit, yet the data proves that excessive activity is the fastest way to erode your returns. The harder you try to outmaneuver the global economy, the more you end up paying in hidden costs and emotional taxes. The hustle finance culture celebrates the grind of watching tickers and reading balance sheets like it's a necessary badge of honor. They want you to believe that wealth is a direct reward for suffering and constant, high-stakes vigilance. In reality, your portfolio doesn't care how much you sweat or how many sleepless nights you spend obsessing over the latest economic headlines. Wall Street fundamentally hates the lazy genius because a passive investor is nearly impossible to monetize. When you buy the entire market and commit to holding it, you stop generating the commissions and management fees that fund their lavish lifestyles. You are effectively opting out of a rigged game where the house only wins if they can keep you clicking and trading. The confrontation ends the moment you accept that your most powerful move is to do absolutely nothing at all. By embracing this strategic laziness, you aren't surrendering your potential, you're actually choosing the most mathematically sound path to wealth. Now that we've dismantled the myth of the active expert, we can finally construct the simple machine that does the work for you. So, you've finally reached the finish line of your financial education and the machine is ready to be built. You understand that low-cost index funds are the ultimate weapon and that doing nothing is your greatest strategy. It feels like the weight of the world has been lifted off your shoulders because the mystery is finally solved. You've successfully ignored the noise, bypassed the expensive advisors, and simplified your entire financial future into a single, elegant plan. The path is clear, the math is on your side, and your automated wealth machine is ready to be switched on. It seems like there's nothing left to do but sit back and watch the numbers grow. This is the part where most people stop watching, confident that they have all the tools they need to succeed. You've learned the secrets of the lazy genius and you're ready to reclaim your time and your freedom. The journey from confusion to clarity is complete, and your financial independence feels like an inevitable conclusion. You can go ahead and close this video, open your brokerage account, and put this 15-minute plan into immediate action. You've outsmarted the system by refusing to play their complicated games, and that's a victory worth celebrating. The hard part is over, and the rest is just waiting for the magic of compound interest to take over. But as you reach for the mouse to close the tab, a small, nagging feeling starts to creep into the back of your mind. You realize that while you have the map, you haven't actually taken the first step onto the terrain yet. There is a massive difference between knowing the path and actually walking it without tripping over your own feet. The truth is, even the most perfect plan can be completely dismantled by one single, overlooked detail that nobody talks about. You've built the engine, but you might have forgotten to check if the fuel you're using is actually compatible with your long-term goals. This isn't just a minor technicality, it's a fundamental flaw that could stall your progress before you even gain momentum. Most investors fail not because they chose the wrong fund, but because they didn't account for the invisible leak that drains portfolios in silence. You think you're safe because you've followed the rules of the lazy genius, but there's a hidden trapdoor waiting for you. If you ignore this one critical piece of the puzzle, all your efforts towards simplicity will be for nothing. Just when you thought you were finished, you realize that the most dangerous part of the journey is actually the very first minute of execution. There is one final barrier that separates the people who talk about wealth from the people who actually possess it. If you don't address this now, your 15-minute setup might turn into a lifetime of regret. That regret usually sets in right after you hit the confirm button and feel a false sense of security. You believe that because the account is open and the funds are selected, your journey to wealth is officially on autopilot. You've successfully ignored the gurus and the noise, convinced that your automated machine is now completely bulletproof. However, most people wake up a year later only to realize their balance hasn't grown the way the historical charts promised. They see the market hitting new highs, yet their personal returns are lagging behind in a way that feels like a total betrayal. It's a crushing moment of realization that even a perfect portfolio can be sabotaged by a single, overlooked variable that drains your gains. This is the exact point where the average person concludes that the lazy genius strategy was just another internet myth and pulls their money out. They assume they were sold a dream that doesn't actually work in the messy reality of taxes, fees, and market swings. All that research and mental preparation feels like a waste of time as you watch your potential wealth slowly evaporate. But the failure isn't in the math or the market, it's in the one thing you forgot to automate, your own human psychology. You've built a high-performance engine, but you haven't locked the cockpit door to keep yourself from grabbing the controls and crashing it. There is one final, secret step that ensures your 15-minute setup actually survives the next 40 years of global chaos. The secret to locking that cockpit door is replacing your willpower with a system that treats your future self as a non-negotiable expense. You don't need a complex strategy to protect your gains, you just need to automate the behavior that most people find impossible to maintain. By turning your investments into a background process, you eliminate the emotional friction that leads to expensive mistakes. The ultimate lazy genius portfolio isn't a collection of hot stocks, but a simple 3-fund total market strategy. This elegant setup captures the growth of the entire US stock market, the international economy, and the stability of the bond market all at once. It is the financial equivalent of owning the entire forest instead of trying to predict which single tree will grow the tallest. Setting this up takes exactly 15 minutes because you are only making 3 primary decisions that will last for decades. First, you choose a low-cost brokerage that doesn't charge you for the privilege of existing. Then, you select total market index funds with expense ratios so low they are practically invisible to your bottom line. Your allocation is the only lever you actually need to pull, and it's based entirely on how much time you have left before you need the money. If you're young, you lean heavily into the total stock market to capture maximum growth over the long haul. As you get closer to retirement, you slowly tilt the scales toward bonds to protect the wealth you've already built from sudden market swings. The real magic happens when you link your bank account and set up a recurring monthly contribution that triggers the moment your paycheck hits. This is the automation that bypasses your brain and ensures you are buying more shares when prices are low and fewer when they are high. You are effectively dollar-cost averaging your way to wealth without ever having to check a single stock ticker. This system resolves the conflict between your desire for wealth and your natural tendency to overcomplicate things for the sake of feeling productive. You've successfully integrated the cold data of market performance with the reality of human psychology. By doing less, you are finally positioned to earn more than the professionals who spend their lives chasing the dragon of active management. This is the minimum effective dose of finance, where every minute spent beyond this setup actually yields diminishing returns. You have stripped away the jargon, the high fees, and the useless noise that the industry uses to keep you dependent on them. You are now the owner of a self-sustaining wealth machine that requires zero maintenance and offers maximum peace of mind. You have officially exploited the lazy genius arbitrage by trading 15 minutes of setup for a lifetime of compound growth. The path to financial freedom is no longer a mystery or a high-stakes puzzle. It is a simple, automated reality. Now that the machine is running, the only thing left to master is the discipline to let it work its magic undisturbed. This discipline isn't about white-knuckling your way through a market crash. It's about building a psychological firewall that keeps your ego away from the sell button. You must internalize the fact that your portfolio is like a bar of soap, where the more you touch it, the smaller it gets. By automating your contributions and ignoring the daily headlines, you turn your greatest human weakness into a calculated financial strength. You have effectively harnessed the power of the global economy and put it to work inside a simple, low-cost container. This is the moment where the 15 minutes of setup you performed transforms into a lifetime of compounding that works while you sleep, travel, or play. You are no longer gambling on individual stocks or chasing the latest trend. You are simply harvesting the inevitable growth of human innovation. The industry's attempt to confuse you with jargon and high-stakes drama has officially failed because you chose the path of radical simplicity. You've reclaimed the thousands of dollars in fees that would have gone to fund someone else's yacht, keeping that wealth where it belongs in your own account. The conflict between your desire for wealth and the complexity of the system has been permanently resolved by your refusal to play a rigged game. Every element of the lazy genius arbitrage is now locked into place, creating a self-sustaining loop of growth and freedom. You've successfully exploited the gap between what the experts say and what the data actually proves to be true. The machine is finished, the path is clear, and your only remaining job is to go out and live a life that isn't defined by a ticker symbol. Now that the heavy lifting is done, your relationship with money has fundamentally shifted from a source of anxiety to a quiet background utility. You've successfully decoupled your time from your earnings, allowing you to focus on the things that actually matter. This isn't just about a bank balance, it's about the peace of mind that comes from knowing your future is already secured. While everyone else is losing sleep over the latest market dip, you're busy building a life of intention and freedom. The small seed you planted in those 15 minutes will eventually grow into a forest that provides shade for you and your family for generations. You've traded a tiny bit of initial effort for a massive, compounding legacy that requires nothing but your patience. You've officially mastered the art of doing more by doing less, proving that the loudest voices in finance are often the least effective. The lazy genius strategy isn't a shortcut, it's the most direct path to the finish line that everyone else is trying to avoid. You are now part of the small percentage of investors who actually keep what they earn and grow what they keep. But now that your wealth is growing on autopilot, you're going to face a new set of high-level problems that most people never get to experience. Specifically, you need to know how to shield those growing gains from the one entity that wants a piece of your success more than anyone else. If you want to see how to protect your new fortune from the invisible tax traps that catch even the smartest investors, you need to understand the next level of the game.